Hello and welcome to LedgerCast. I'm Brian Krogsgaard here with Carpe Noctem, aka Ledger Status. I'm Ledger Status. You're Josh Olsowich. Wow. It's Friday. We're here. Thanks for being with us. And let me let you know that this episode is brought to you by Token Sets. Go to ledgerstatus.com/sets. It's asset management for a DeFi world. You can bring your crypto strategies to life on the Ethereum blockchain and Polygon now, with Set's leading portfolio management tools, whether it is the DeFi Pulse Index or my own Tulip, or the Bed, which is a new one from the Bankless crew and some index co-op folks. That's Bitcoin, Ethereum, and DeFi equal weight, which is a pretty cool one. You can do it with Token Sets, ledgerstatus.com/sets. Check it out. See if one of those strategies works for you. And thanks to Sets for being our partners. Joshua, how you doing?
Good. I think the worst thing you could do these days is stake anything, because if you're smart about even DeFi plays, you can get insane yields right now on so many things.
Wait, you said the worst thing you can do is stake anything?
Yeah.
You mean
imagine staking ETH in the face of NFTs, in the face of everything that's going on right now. It just seems like such a silly play, right? Like, yeah, it's like cold storage for ETH in this case, but
well, you can do all of the above on some places. Like you can,
sure.
I'm gonna find it.
I just mean in general. I talk about this a lot in my videos from Raven Coin, but when you're a proof of stake chain or have staking stuff, you're competing directly or indirectly with all of DeFi, all of the yield stuff, Yearn, Aave, Comp, Maker, right?
Yeah.
The yield on Tether today on Aave hit over 50% because they ran out of Tether to lend, So if you want to risk into Tether, right, whatever, but stuff like that. Anyway.
Well, you can use something like convex finance, and you can Ponzi your staking. So you can stake your ETH for staked ETH on Lido, and then you can take it from there and deposit it in like a combination of Curve and Convex, which is on top of Curve, and then essentially double up your rewards. And I think the effective APY is actually quite good. My friend is doing it right now, and he told me. But that's what's going to happen is people are going to make their yield liquid, right? Like their staked ETH will be liquid ETH, and then it can be used in the same way as ETH on all those other platforms. So I don't think it's so bad.
No, well, it's fine for the ETH stuff. I'm just saying, like, mainly non-ETH people, like any non-ETH chain that can't be liquid while you're staking. It's just like, why? The chain it's dead. There's no argument to be made,
Yeah. Okay. So he said staked ETH itself yields 5.5%, but if you deposit it into Curve for Curve staked ETH, and then stake Curve staked ETH on Harvest or Yearn or I guess Convex, you end up with maybe like 8 or 9% of additional reward. So you end up maybe 12 or 13% for Ethereum exposure, which is pretty good. So anyway,
I'm just thinking about all. Okay, so we've been here. Maybe you've been here since 2013. People in the chat, maybe you've been here earlier. Think about all the things that happened, all the cycles with altcoins, the craziness with Doge, the stuff that's happening with NFTs right now, and it's just like all of that can't happen anymore the same way it did previously, most likely. This stuff like Solana, I see a ton of stuff about Solana and various altcoins, but ETH just has such a big moat. It has such a big first mover advantage. It's like, why would I bother playing around in anywhere else right now, right? Like, I might even hate ETH like I do, but it's just too easy. It's just too easy to make money on ETH, right? Like, well, who cares about Solana or Polkadot or any of this other crap, right? It's just crazy to me.
Yeah.
That any of this other stuff is going to like see the light of day. ADA even, I saw some junk about ADA.
Well, especially because ETH sidechains and layer 2 are also cross-compatible, that people are just going to live on different layers of Ethereum. They don't need to live on these other layer ones, really, for the most part. Some will have a claim, but the proof will be in the pudding of how they're used over time. But nevertheless, yes, I agree with you. Like staking Tezos, I would not do, right? I don't see the use case for Tezos, even though they're working hard to try to force one. And the market is mostly, agreeing. Like, you could look at the USD pair of Tezos and be like, oh yeah, this is doing fine. But you look at it relative to Bitcoin, it's garbage. And I bet you, if I do XTZ over ETH, let's see, Kraken has that pair.
Mm-hmm.
It's just been getting obliterated.
I saw I don't know who made it, but it was in Bloomberg. They were saying the proof of stake chains were outperforming proof of work chains. I don't know. I think everything is ready to be completely turned on its head as far as altcoins, like basically existing. They just have no chance. They're just dead on the water, dead on arrival. Sorry.
Alternative layer 1 chains, not productive DeFi coins, or productive, because Ethereum is doing well because other projects with coins live on top. So like those work in tandem.
Yes, I'm just saying, like in general, there's always a choice to be made where people put their money, and if they want low volatility plays that get yield, they're not going to do it on a proof of stake chain. They're going to do it through DeFi, right?
Yeah. Kuzi in the chat says AVAX, Solana, and Polkadot. I agree. Those are the ones with the most hype. Atom and Algo maybe on top of that, but all of these run massive risk of empty cathedral syndrome, where they build a fancy thing meant to scale on layer 1 and then it doesn't matter because everybody just uses Ethereum. That said, you have a Bitcoin chart on the screen, and we have for a while.
This is ETH. What do you mean?
Oh, that's ETH? I can't see it.
Gotta get that LASIK.
Well, I'm looking at it on the stream version, so it's far too small. Now I'm looking at it on your thing. Yeah. So what are your thoughts on Ethereum? I mean, it looks crazy strong. It looks like you're showing it as just clearing a 50% retrace top to bottom.
Yeah, the perpetual worry is too much too soon. And okay, so you're already in spot, or you're in leverage currently. It's like, what do you do? Do you just say it's going to go up forever, or do you start to take profit? Do you start to rotate into other stuff that hasn't moved? For me, I do not want to touch this on leverage. Like this, is this going to go to 42 without me on leverage? I don't know. Maybe. What do you think?
4,200.
Yeah, it's only $1,000 up from here, but it's just like we're up what? It's just probabilities. This isn't necessarily like EIP 1559 doing anything it isn't supposed to be doing. But so we're up 85% from the bottom, and I guess my question is, we're going to go up 30% before we go down 30%, right?
Yeah. You have the 0.5 retrace. The 0.618 is 3358, which is also the congestion, right before it broke down, right before that terrible May 19th candle. That's the 0.618 goes right back to that. So I find that an interesting location. I think that it looks very strong. It looks like dips are for buying, but I agree being on leverage here feels unwise. We're starting to get into that underside of breakdown zone. So I think from here, you need consolidation. We had days of consolidation, but it needs more than that. It needs proper consolidation. I think you could make the case for trades in this zone, but you have to have tight stops. Otherwise, I've just been pretty comfy in spot personally. So I don't know. Maybe I'm just lazy. I don't feel a need to trade any of this stuff on margin. I haven't traded on margin in a while.
Well, unless I'm trading on FTX, I can't anyway as a US person. But yeah, it's gone up enough without leverage. Why do you need to add on to that? I don't know. So that's what makes me nervous about ETH and BTC. But I think ultimately, potentially Q4, this thing could go 6K plus for ETH. BTC could go to 6 figures in Q4. We survived the bottom, right? Let's go.
6K is now a 1.618 retrace. Do you remember my January 1st predictions for Bitcoin and Ethereum?
I remember you owe me a steak. I don't remember the prediction.
I do owe you a steak. We'll make it do. But my January 1 predictions were ETH peaks at 6K for the year and Bitcoin peaks at 64K. Or 64 or 66. I think I said 66. So if Bitcoin fails to make new highs, but ETH does and goes and hits it, so it's actually a 1.618. It's a clean little retrace or a clean little extension. Then my prediction would become completely true, which would be like crazy. I could imagine that happening, ETH hitting 0.1 on the BTC pair and that being the close to the top. But Mr. Vixie in the chat, or maybe you're a decimal year thing. You can't believe the steak hasn't been paid yet. I have not visited Josh's state. I don't know if you noticed, but this is a remote call. We haven't met in person. The point is we're having dinner together.
We'll figure it out eventually. I just kind of don't know what else to say about BT series, right? Like you can't be bearish because we flipped all of the MAs. We flipped all of the trend metrics. There's not a single thing I can point to that's bearish anymore on TA. It's just I'd much rather get in a leverage position at a lower level than this, or with consolidation.
Yeah. So it's been fascinating because we cleared the local high from June 14th, our kind of first dead cat looking bounce. And then we went under it. So we kind of ruined people top side and bottom side of that. And then just turboed right up above the 200-day, consolidated, and now it looks like we're breaking cleanly above the 200-day. If you're going to buy a retrace and use the 200-day as your barometer for the simple moving averages, you could buy 45-ish, low 45s. And from here, I don't know, man. It's just, I don't know, comfy in spot. This is very difficult to trade. The degree to which this was a trap, this fake breakdown, is extreme. I mean, we are 63% off the lows July 20th. And
we basically had that one guy buy a bunch of calls on a Friday. Yeah. Who's still doing that, by the way. He did it today again
today. He's done it three times and it's worked every time.
So good for them. Thank you, whoever you are.
60+% on a daily closing basis in less than a month. And I mean, I've kept calling this a sidelines trap. So it's just totally screwing over anyone who doesn't aggressively buy the retrace. And it's just, I cannot imagine how bad I'd be coping if I was in cash. You're like, I'll buy the retrace. And suddenly it's your all-time highs. Funding has been totally chill constantly.
Yeah, it's been calm, tame.
Yeah. There's no derivative euphoria. There's NFT driven euphoria, but we're not certain that is bearish for ETH, because what happens is as people capitulate on their NFTs is they buy ETH.
Well, the weird part is we're doing all this. It's like that How the Grinch Stole Christmas gif. We did it without packages, boxes, or bags. We're still singing Yahoo Forest or whatever it is in the town square where we lost China. We lost leverage everywhere. We lost every country on Binance, right? The dominoes keep falling for Binance. So where's it all coming from? Is this all just institutional money coming in? Who is it? It's not leverage, right? We already said funding's fine. Borrow volume on DeFi is at an all-time high, so that's part of it, but it's kind of nuts.
It's glorious is what it is.
I'm happy we are not at 20K, certainly.
I mean, we could have easily been at 20K right now.
Oh, 100%. Extremely.
This is why this is always a game of trying to play the outcomes, right? And then you respond to them. And you have to you have to abide by your systems. Like Josh, you remember we talked, both of us agreed that like 33.5 to 34 was kind of like well, you just got to buy and pray you don't get nuked off of that.
Mm-hmm.
And like there was no time to buy if you just didn't pull the trigger, right? Like if you were trying to buy a localized dip, you didn't get it.
You had to stick to your guns there and say, yeah, okay, let's go.
Yeah, it told me the short term flipped, and therefore I shall. So what I want to ask you, instead of just navel gazing what's been, is where, if we get a dip, where are you buying it? Or where would you, if you were in cash? Let's do a thought process for the teams at home. If you're in cash, where do you buy? My first level personally is now 45, a couple $1,000s down from where we are right now. The next one, which is a lot dicier, would be like 42. Below 42, I get quite nervous because you start, you start breaking prior high type stuff levels, and that makes me a little more nervous. So, what do you think?
I mean, I like buying all the way down to 37 personally.
Oof. Yeah, I guess if you're not in, you desperately want to be in, if you think the dip is relatively over, then maybe you can go that low. But being in, I don't like the idea of 37. I don't want to hold coins from here to 37.
Well, exactly. Of course you don't. Which is, I talked about this in the video. It's like your stop loss is probably around 37. That's where I feel most comfortable getting in. I don't know. The cloud in the 12 hour is telling you 38 as far as the Kijun is concerned. I don't know. It's difficult. When anything goes up this quickly, it forces you to make a decision you don't want to make all the time,
Yeah. Z German, we just talked about this. You said you were perma bear at 30K. Funny how much can change in a few days. We were not perma bear. This looks like it's going to break down. And it did. It faked out. It came back up. And therefore, you change your bias. You have to be a quick responder in this ecosystem. I went to cash and back again. I stayed liquid throughout this move down, lowered my price several times, and was lucky enough to I've captured the vast majority of this move. You have to have been flexible there, because it could have gone easily, like we just said, it could have gone to 20K, 24, something like that. Nothing was stopping it from doing what it did to the upside, to the downside. And as Josh mentioned, I truly think a small number of players made this happen so far. So you got to be flexible, man.
Yeah, and you can't. Anybody who trades this like seriously in a big way, like Light or whoever else was bearish when whatever was happening, it's like that was what the chart was telling you to be. I mean, yeah, we were down 60% or whatever from the top, but I don't know. I said that in the video too. I wouldn't have changed any of the analysis I did a month ago, because that's exactly how I would read it today. Same thing. We just happened to reverse as quickly as we did. And yeah, you have to hold strong positions loosely, right? Or strong convictions loosely, whatever that saying is.
Yeah.
And like the daily cloud isn't even bullish yet. We are so far above the daily Kijun. This is going to take some time for these averages to catch up, which makes me uncomfortable still being long up here. Even in spot, I get sort of uncomfortable when stuff looks like this, because this is not normal. This is extremely rare to see the strength that we've seen. And everybody can say, yeah, I knew this was going to happen, blah, blah, blah. But no, this is not normal at all. Look at the ETH 2-day chart. Look at a lot of these alts that are just moving 20% every day. Not normal. Not normal.
But fun.
Yeah, it's
fun
great.
If you're in.
I'm happy. I don't want to sound like I'm like in a bad mood because it's going up. I love it, but it's definitely not normal.
What else are you looking at? Bitcoin?
The DeFi stuff. So I've been saying this on the weekly open for a little while, but rotating out of higher caps, out of NFTs into cash or stuff that hasn't moved yet is just like the logical thing to do, And DeFi, some of this stuff hasn't moved yet. Comp specifically has been a laggard despite it looking super strong relative to everything else. But on the index, we're just getting this bullish recross and it's back into the previous range. This could very easily have another leg.
It's closing. It's closing above the simple moving average on that DeFi perp as well.
Yeah, much like BTC and ETH. You know, with the bottom is in, you measure the high to low, and there's your target. Boom.
What I've found interesting is that stuff is not moving fully together, which is bullish in my mind. Like if it was all just floating together, it's sans fundamentals, but we're seeing stuff really specifically move, like things that were down a lot deserved more mean reversion, things that need consolidation that outperformed for a while are doing that, which I think that's, by the way, like kind of where comp fits in. Like it was up over 100% off the bottom, and I do think it's just consolidating above its 200, where a lot of stuff is still mean reverting to its 200. Like I look at Curve, I talked about this move on this show and Weekly Open, like it's getting close to its target, but on the underside of the 200. Curve has a fundamental event coming up where their emissions are going way down. So that's like part of that as well. You look at Sushi, it's been pretty quiet today. It too is on the underside of its 200. SNX, still quite a ways to go until it gets there. So we've seen things generally have similar trajectories, but like have very different looks about them. Wi-Fi still quite a laggard, but looks like it could have a proper breakout. And most of these on the ETH pairs, like you look at Wi-Fi as an example, been bleeding like crazy and just now showing some signs of life relative to Ethereum. And I think that, to me, that's indicative that if these, break above those moving averages, really break above those ranges relative to Ethereum, they could stop being, non-differentiated, and they could outperform Ethereum for a while. And that would be, on the dollar pairs, that would be huge moves. So that's personally where most of my exposure is.
Yeah, if you look at any alt ETH chart right now, they all have multi-week bull divs. So if I'm going to be buying anything or rotating into anything, I want a multi-week bull div. I want a falling wedge. I want capitulative volume profile, whatever. I want ETH USD at a relative like euphoria, peak high mania, which it feels like it's getting there from the bottom anyway. This is comp. I don't know. I still think it looks good. You've got inverted head and shoulders. You've got cup and handle, right? Like,
yeah, comp's my largest position of all positions. Like I have more comp than ETH. Like I've got.
You just gotta hope. You just gotta hope this whole thing isn't some diamond top.
Yeah, no, I've been looking at that. It looks, it looks good to me. Like everything that I look at tells me this is where you buy, and you just be patient, wait for it to do its thing. But when it does this for like a week straight, it can be crushing. I've been adding to my position as it's consolidated, so it wasn't my largest position, but it is now.
And like I already said, borrow volume all-time high. A lot of this is underlying asset appreciation, but that is incredibly bullish. It also says be careful, because if this gets cold like it did on the 18th of May, that's going to hurt, right? But this is healthy as far as people leveraging up again. And I think did I say this already? Aave ran out of USDT today. Yeah, I said that.
That's kind of scary.
Yeah, it reminds me of the old Bitfinex days, and we used to look at the BFX data, and you'd see Tether funding spike.
Look at this. Generally, these ETH relative charts also trade in more range formats than they do like very clear channels, which makes sense because both of them are growth assets. But like as strong as Curve looks recently, you look at relative to Ethereum, it looks like it's just now starting to do anything. So pretty much all year, there's been these massive trade ranges that you could have played something like Curve on if your goal is stacking Ethereum. So I think people really need to pay more attention to the ETH-related charts if they weren't already. Because Ethereum's been so strongly performing that you could end up thinking you're doing well in something, but in fact, you're just kind of round tripping relative to ETH.
That's why I asked that poll on Twitter. What do we call the SAT equivalent for ETH? And then Gwei or
Gwei.
Gwei. That's not quite what I'm talking about. I didn't specify clear enough, but I mean specifically for the alt ETH pairs. We need some agreed upon term for that. Everybody's saying Gwei, whatever, but it's not 10 to the 8th, right? It's like 10 to the 9th.
Yeah, I don't know.
Negative 9th. Anyway, we need some term for that. So make it happen.
I just call them the DeFi ratios or something. ETH ratios. No different than BTC pairs.
The smallest unit is like -9, right?
Yeah, it's bigger.
Whatever. It's bigger than whatever the BTC one is. Anyway, yeah, I agree 100%. You need to be looking at the ETH relative charts if you are looking to rotate out of ETH or holding DeFi at all. Definitely agree with you there, because this stuff looks like Sushi looks like it's getting close to that 14 target. You had talked about 12 a couple of weeks ago, I think. 14 is the cloud level, which is just, again, some 50% from high to low. But this looks like it's getting to the end on the USD chart, but on the ETH chart, it has a ways to go yet, if I had to guess. Yeah, I mean, this isn't even turned the corner yet against ETH.
Which one is that versus ETH?
This is Sushi.
Sushi, yeah.
Yeah.
But it's at resistance on the dollar pair. In the video, in picture-in-picture, it looks like I'm looking at the chart. I have a monitor with your screen on it above my main monitor, but it looks hilarious on the chart.
So yeah, I like rotating out of ETH and into stuff like this, at least partially, right? You don't have to take full profit. Again, not investment advice, but yeah, I think that's a smart thing to do.
Josh, you're not going to want to hear it, but this OpenSea volume.
Well, that's what I was trying to pull up on the block. Yeah, thank you.
This is some version of it on Dune. Wow.
Well, it is going down, so that's another be careful signal for NFTs.
Yeah. But, I mean, it peaked around 77 million. Yeah, 77 million on a daily basis. So it's still at 43 million today so far. 57 million on a closing basis yesterday. Monthly basis just blows everything out of the water. This is a 2+ billion annual type of rate. Is that right? 77
sure.
million.
It's huge. Is there a way to see like ETH through OpenSea at all outside of volume? Is there some smart contract that holds the ETH in some way?
No, that's non-custodial.
Just trying to think of another way to view that volume.
You could view like stuff on offers. Another could be to see how much Ethereum is OpenSea burning or is being burned due to due to people transacting on OpenSea. And the answer is, since 1559 went into effect, OpenSea is responsible for 5,000 ETH burning, which is maybe almost twice, maybe 80% more than Uniswap V2, and more than double Axie Infinity. Yeah, it looks like it's basically more than all DEXs combined.
Do we know if they've implemented 1559 at all?
I saw a couple of 1559 style MetaMask transactions today in my own wallet. So I don't remember if it was OpenSea or not. But more dApps are supporting that format. So
that's a dirty little secret. Only 20% of transactions on the network are actually carrying through with the 1559 format or whatever implementation.
Yeah. Okay.
So everybody's overpaying is what I'm trying to say. Go ahead.
Right. And for the people at home, we're at about 40,000 ETH from 1559 cumulative, which is a lot. Good question from Friendzen. So if I'm all cash, is it better to wait for a retrace in majors or buy DeFi right now? This is not financial advice. This is how would we play it. If I was playing it, I would be looking for good dollar setups in DeFi with the caution that we could backtrace, retrace on ETH and BTC, which would be bigger moves on DeFi. But if we keep going up, even if it's like grinding up, floating up, something like that, your gain potential is higher in DeFi right now than it is in ETH, in my opinion.
At least in the near term.
Right. So when we're talking about which pairs look like they're a little laggy, like maybe comp, in my mind, if I'm looking at US dollar pairs in a vacuum, I want to be in this, right? This looks like it has breakout potential to 700, which is my whole reason I am in it. So I'd be willing to hold that in dollars because I think it has the chance to outperform Ethereum. But if Ethereum goes down, this can go down too. And if this goes below 430, something like that, it would not be good. But that's about 10%, a 10% move down from here. So you could lose 10% trying to make that trade, but you could gain 30 or 40%, which is going to be 30 or 40% on Ethereum. What's that, Josh? That would be
down.
All-time highs.
I was going to say down or up.
So it doesn't require all-time highs on DeFi to get the same move. Yeah. Whereas on ETH itself, if it goes to all-time highs, people are going to be losing their mind. So
yeah, there's always an opportunity cost, right? As far as rotating out of ETH, if it keeps going or whatever. But at some point, the percentages make sense, right? For your risk reward, your yields, whatever, blah, 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 you know, that's why all this is super personal, depending on what everyone else is doing. Another one I like is ZRX. That hasn't moved up yet. So here's my list. These are the things to watch. Comp, ZRX, SNX, and Melon, MLN is another good one. Oh, we can pull up that chart, but the reason I like ZRX is because its cloud level is 50 cents higher than where it is now. That's a pretty significant move.
Yeah, looks good.
And SNX hasn't Adam and Eve-ish thing, and that hasn't even gone to its level at 16 yet, 1650, let's say. So I like that one. And then Melon's a bit of a strange chart, smaller cap. Let me pull up a chart that actually makes sense. It has this like ascending triangle, inverted head and shoulder. I don't even know what to call this nonsense, but it looks like it, well, it's highs. Hasn't quite moved up yet. Those are the ones I like. We talked about comp already. Comp looks phenomenal still. 4 highs. But yeah, everything else in DeFi kind of has moved up a little bit up already and has less upside relative to these 4 in my mind.
Here's a pair that I used to track a good bit and haven't looked at in a while. Synthetics relative to Aave. And this used to be a really nice trade. Like even, before October 2020. And it was this big range. And then basically at the end of January this year, so as DeFi season was kind of ending, Aave has relatively outperformed synthetics massively. But it looks like that could be the type of thing where there's a catch-up trade on a relative basis, So if I was in Aave, which has performed really, really well, it might be the type of thing where you seek rotation. But look at this Aave USD. That's so much stronger. It's above its 200. It's above the congestion range, and synthetics is under the 200, under the congestion range. There's a 40% move to get to the relative basis where Aave is for synthetics. So when you're looking at those relative trades, that's the type of thing you can look at.
And it's worth mentioning on DeFi, like we talked about last week, there's a perpetual regulatory concern. So keep that in mind. This free money, non-KYC AML show isn't going to last forever.
I think
in every country around the world, it'll change in varying places. But
part of me wonders if that's what's causing some of the laggardness in some of these. Like synthetics is definitely a higher regulatory risk because it's literal synthetic assets.
Well, Uni delisted. If you look at that list of things, Uni delisted 65 things were
Yeah.
SNX derivatives.
And then
So
that's the other one, like Uni, Comp, ZRX. That's kind of like American DeFi, you know? And I wonder if that's the other component of that, if people are a little more hesitant with the American-based DeFi stuff. I don't know, just a random.
and it's also worth mentioning, get your crap off Binance. You know, I can't beat that drum hard enough. This is the FTT chart, but today Binance delisted South Korean won pairs. Okay, so eventually it's going to be in a neighborhood near you. Money's not going to get hacked. Money's not going to get stolen, but I would just take it off while you can. Yeah, FTT has had a phenomenal move off the bottom.
Here's another one that has a enormous laggard style trade, but I don't know what to make of it. Is Balancer. Like, it has a huge move to its 200-day moving average, huge move to its all-time highs. Like, it's still a triple away from its all-time highs. Most DeFi coins have done better than that, right?
Yeah.
But what's interesting is, from a fundamental perspective, I don't know if Balancer is like this may be justified. You know what I mean? Like, some of these are getting more usage than others, right? The reason Aave has done so well is because people love Aave. They use Aave. Sushi earns a lot for its token holders. You know, there's a lot of these types of things to consider. So, anyway.
Yeah, if we look at the PE,
sir, please check FTT this moment.
If we look at the PE ratios for stuff, Sushi's perpetually at the bottom, currently, along with Comp and Aave. If we look at volumes, it's Uni, Sushi, 1inch. Those are usually the top three. If we look at lending and borrowing, Aave and Comp are winning out over Maker right now. And I think, yeah, a lot of that stuff is just people just looking at those numbers saying, okay, this makes sense. You know, people love, like you said, people love Aave, people love Comp, and it's easier to get loans on those platforms compared to Maker, in my opinion, just based on the UX.
And it's just a core DeFi experience, like lending and borrowing.
Yeah.
Absolute core experience. Have there been stablecoin mints, Josh? Do you know? Like, is there new Tether hitting the market? New USDC hitting the market?
I can check, but since China left, there hasn't been much Tether stuff. But let's check.
I have FTT in this watch list. My watch list is obviously too long because I can't see anything.
The only place I can get FTT is Matcha, basically, as a U.S. citizen, right?
Yeah, you mean to buy it, which is fine. But I'm talking about just looking at it in this this giant watch list I have.
That's why I would forget about it, because unless I can get it where I have money, like, you know, it takes effort to actually pull the trigger.
And you have less of a size of your portfolio on chain than I do. Like, if Correct. It's on chain, I can buy it, no problem. I just don't. Exchange tokens have done really well. They're just not where I'm comfortable. Like, I like the idea of the open protocols better than exchange tokens from a investable perspective. I don't know why.
That makes sense. I think unless you're like an FTT user or a BNB user, you're probably not paying too much attention.
Yeah, they use it to get like a lot large fee reductions and stuff like that. Which I get. I get that.
It's got utility for sure. I'm trying to pull up the issuance metric for Tether.
I was gonna point. Did we talk about Badger last week? I actually sold my Badger close to the top. I was pretty proud of myself, but it's retraced most of that today. It's up 18%. The reason I bring it up, though, is because some of these mid caps and stuff have performed like massively. It bottomed around $7, maybe below $7, and it's 4x off the bottom. We're seeing more of that from some of these mid cap things, but some are lagging. Like Keep is one of those ones that dumped forever off Coinbase from its listing, but it bottomed around 23 cents and is at 40 cents. But this looks a little fresher in its breakout. So there's like, all these charts are not the same, and it's worth considering.
I would encourage people to do a scan once a week. Doesn't have to take a lot of time. You can even set up a screener for it and just set whatever metrics you're trying to pay attention to and go from there, because it's too easy to rotate out of stuff that's already moved and into stuff that isn't. You kind of don't have an excuse for not trading it, smartly a little bit. If we look at the issuance for Tether, we did get a print on Tron, which may have been like not a non-print. I don't know, but there really hasn't been any continuous Tether printing since China left. USDC, on the other hand, just continues to print in the purple there. Every day it's around 200 million plus. Just crazy.
Yeah. That's got to be mostly money coming in, right?
I would think. And I think it's going more towards yield side of things and less towards like speccing on volatility, but that could be changing as this stuff is popping off.
Well, that's how some people get exposure, especially big funds that like they want exposure to an emerging DeFi protocol. So they'll go put stable coins on it and farm it. They don't have to buy the coin outright. And then their risk is low other than the smart contract risk. But they're able to essentially farm their bag with a whole bunch of stables, and a lot of them have a whole bunch of stables, so they can do that. And then they can get the upside of these emerging protocols without actually having to buy them.
Yeah, which is another reason to bring it full circle. Why would you do anything proof of stake related when you can just get yield on stable coins? You're not going to. If you're somebody with capital, why would you risk that? The people with capital love these risk-free trades like that. They loved the GBTC ETH stuff, right? They loved anything that's yield generating that's low risk. And so people will flock to that, which is why USDC is printing what they're printing, I'm pretty sure.
Yeah. I got a funny chart for this. It's making fun of myself a little bit, but also just to show like how much of a fake out things can be sometimes. They said there's strong volume coming in on ICP. I drew a chart on ICP about it making lows and looking like it was going back to the investor break even at $4. And that was the bottom. Made that low. It's ridiculous double bottom. But I thought I'd show my chart on it where I was scribbling just for fun. This is the type where I still have zero interest. This is Definity or Internet Computer Protocol, whatever. I don't care. I don't care if it's double off the bottom. I don't care anything. The fully diluted value is insane. The product is not used. It's just you're just buying some big investors' bags. It's not worth it. Not interested.
I feel the same about ADA. ADA is effectively back to its all-time high ish at 205. But I'm really not going to touch this thing. It's just not for me. The fundamentals just aren't there. At the very least, you need to be somewhat convinced on fundamentals of this stuff.
Yeah, we've said this many times, but I generally like to be able to choose what you're going to trade based on fundamentals, and then choose when you're going to trade them based on technicals. And I will never get on board with an ICP type of asset. It's the same reason I haven't traded Tezos in forever. There was a time where I was like, thought Tezos had a real chance, and that time has passed. And if I don't think something can succeed from a fundamental perspective, then I don't even care about the technicals. There was other interesting news today, Josh, which was Polygon, aka the Matic token, bought another network. Did you see this?
No, I did not.
There is a token. There's a token.
Who did they buy?
A token merger. I'll let the chat tell us the name of it. It's something I'd never even heard of. But Matic is a side chain, not a proper layer 2. So the token or the project that they bought and are merging the token in with is an actual layer 2. So it's kind of like they're hiring the engineering talent and the technology, but it's a layer 2 that basically didn't catch a lot of its own attention. But it's their attempt to essentially switch to ZK rollup layer 2, like be a proper layer 2, which is actually, I think, an incredibly genius move by them. I'm not hating on it at all. So they got a lot of people over because of being a side chain and being really easy, being really compatible. And now they hired the engineering talent and the technology to like actually have the security mechanisms of Ethereum. And the name of the protocol was Hermes, Hermez, I believe. Thank you, Muse. So, yeah, interesting.
I saw the hacker returned the money, apparently.
Oh, yeah.
Let's be clear. It wasn't really a hack if the code is shitty, right?
It is a hack. It is. They didn't.
I don't know what you even call it an exploit. You know?
It's still a hack. It wasn't the same as like a flash loan where you manipulated a protocol in the way it's supposed to be manipulated. It's like you purposefully drained it when that was obviously not kosher. But anyway, these are two different topics. I just wanted to say,
yeah, well, it's related to Matic, right? That's the same Matic, or am I crazy?
No. That was Poly something else. Poly network. I think it was based on the Polygon network, but it wasn't Matic. So you're talking about something else completely.
I'm too boomer.
You're too boomer. I was wondering where you were going with that. No, the Matic network is the sidechain. Polygon network is the sidechain with the Matic token. The Poly, whatever it was that got hacked, the $600 million hack, was not related to Matic. So different things.
There was also a DAO maker hack, not to be confused with Maker DAO.
Yeah.
Just to drive me nuts even more. Can we just pick different names for things? Like, why does it have to be so similar, you know?
Yeah, BWS noted Poly Network, the one that got hacked, it's a bridge for BSC, Ethereum, and Polygon. So in the same tune as what happened with Thorchain and stuff. So the bridges are having a bad time right now. But the guy that hacked it, this is old news by now, but got like full doxed by somebody almost immediately and was basically like, JK, LOL, just testing systems, and returned the funds, trying not to get sent to jail for eternity. Because they did it from addresses highly attached to fully doxed exchange emails or exchange accounts. So very stupid for someone very clever to steal $600 million. Wow, did they screw it up?
There's a series on Netflix called Heist, and they follow 3 different heists. And one of the theme that runs through it is like, you can do this stuff and think you're going to get away with it, but you're going to be looking over your shoulder your entire life unless you pay the price or the consequences for whatever you did. So you rarely like truly are free or get away with it, you know, because there's always that risk of somebody coming after you, whether it be law enforcement or angry people. Before we leave, I want to talk about Legacy real quick, but go ahead.
I was going to say there's another new Netflix original that I can't remember what it's called. Outlanders or Outer Banks. And it's also about like stealing gold or something. But it's funny, like they talk about some amount of money in these TV shows and it's like $10 million. And I'm like, psh, that doesn't even make the news in crypto. If it's not $100 million hack, it's nothing. I haven't watched the show, but it's just funny hearing them talk about like stealing gold, trying to get rid of it. And it's like the dollars in crypto are so absurd that I'm dead to all these amounts.
Well, I even saw that 600 million number when the news hit, and I didn't even like bat an eye at it. It was just like, okay, like I don't know why it didn't register as like a large amount of money to me, but
like imagine a in-person bank heist in America for 600 million today. It would be wall-to-wall CNN news for like 2 weeks. But in crypto, it's just like, psh, all right, just another thing. Doesn't even probably make any national news.
Yeah. Yeah.
If you need to have confirmation of slightly nervous making bubble behavior, we are still not early in the cycle. When people say we are early, they are lying. Like the amount of money
I think we're fairly early.
sloshing around is high.
Well, you and I can make a token and sell it for $1, mint 10 billion of them, and say it's $10 billion, right? Like that's part of what all this is anyway.
Well, you're saying it's not liquid, so it's zombie market caps.
I'm just saying it was created out of nowhere and has some volume, but good luck actually selling $600 million with whatever.
Yeah.
Even though it was ETH and BTC. Anyway, whatever.
You wanted to talk about legacy markets, also known as up-only markets. Like the Qs looked pretty crappy 2 days ago, and they closed the week at all-time highs. It's just what they do. Look at this. Look at the Q. Like, look at that. I had some puts that I capitulated on today because the expiry is too soon. And I thought about rolling them over, but I figured I'd just wait till next week because it's probably going to gap higher on Monday. Yeah.
Well, you'd think this infrastructure bill would be turbo bull for BTC and everything else if it didn't include the crypto stuff, because it's just printing more money, right?
It is. We're going up anyway. You know?
Right. Yeah, that's fair. Dixie getting a little bit of a beat down. I said this week too, like Dixie needs to not break out and VIX needs to not break out because VIX looks primed as well. It's like at 15-ish. I'll take a look at it today, but
I mean,
15.
all this stuff, all the major indexes look extremely overextended and ready for a dip, but that doesn't mean you're going to get it when you expect it.
Yeah, SPX, NDX, it all looks way overbought for weeks and weeks and weeks.
I mean, SPX or the S&P is just like...
It's comical.
It is. It's like, what? What are you supposed to do with that? The 1 week that started red ended up being the most bullish candle I've ever seen in my entire life because it got bought up so much on like the latter half of the week. It's just... Printer go burr.
Yeah, it's lunacy. I don't know.
It's good for...
I don't know. Yeah, it's as long as stuff keeps going up, it's fine, but makes me nervous, you know?
In the chat, talking about the Russell, it's the only one that looks mildly dicey. Don Fitz mentioned it. This is the weekly chart, and it is pure sideways since mid-February. Is this just a gigantic consolidation before upside, or is this more representative of the real economy? I think that's the question here. And, to be honest, I don't think the real economy is that great. Like, you look at earnings relative to prices, those ratios are quite out of control. So all of this is due for a significant pullback or repricing or whatever, but it doesn't mean you'll get it if the money supply is constantly your denominator.
Yeah. I don't know. I don't have anything else to say. That's it. Be smart about rotations. Be smart about taking profit. Don't get too greedy. What is it? Bears make money, bulls make money, pigs get slaughtered, right?
Something like that.
Don't you feel cool when you pull out some legacy thing? You're like, yeah, that's me now. I'm a trader. You know, hogs get slaughtered.
For the chat, we'll answer the rest of your commodities and other technical questions in the after show. But we're 53 minutes in. We might as well call it a day. We got nothing else to say.
Yeah, I mean, what else do you say?
The markets look good. We're just going to hope it continues on for a little bit. Thanks for being here. See you in the after show. We'll answer some more questions. Talk to you later. If you like this show, rate us on iTunes. How about that? Thanks to Sets. Ledgerstats.com/Sets.
Monuments crumble in the blink of an eye. The easy river has just run dry. In a house of cards, I feel the breeze wound so tight I can barely breathe.